Welcome back to the Trading Apologist. My name is Tom, and this is your daily market recap for December 5th, 2025. And all week we have seen the indices grind sideways, drift a little bit higher. But what was notable is that the S&P 500 just saw its highest ever weekly candle close. So from a structural perspective, that is definitely a sign of strength. But it hasn't been mega cap tech that has been leading this week. It has really been the equal weighted tech indice. And tech and transportation have been rallying in tandem for 10 days now, which has set a new record. Historically, those runs have lasted for about 8 days. And when we've seen that happen in the past, while there might be a near-term correction, say early next week, over the next 2 weeks, 3 weeks, month, 2 months down the line, it has led to more positive price action. Now, 3 months down the line doesn't look quite as positive, but that aligns with the thesis that we've been talking about a potential bigger correction in Q1, and March would align historically with, seasonal selling moving into tax season, and when we normally see a low set for Q1. So overall, I am still optimistic that we are going to get more of a December Santa Claus rally. We'll look at the timing and revisit that today as well. And aside from that, as we get into the charts, I really want to, since we covered all the indices yesterday, I want to focus on the active trades for this week and talk about the trades that were taken today, because I announced those in the Patreon community, and I just want to give a little bit more color around the strategy, why I'm taking the trades at a particular time to help you guys think through that decision making and apply it to the assets that you are trading yourselves. And really, I want to do that as a service to the Patreon community because I owe so much to them. It has been a joy being able to do this more regularly in terms of creating the content. And I am very thankful for each of you that support me there in Patreon. So let's get right into the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. All right, starting on the S&P 500. And before we look at the price action, I just wanted to pull up this historical data from Blue Kurtic Market Insights. Great follow on X. They only have, I think, it's just over 1,000 followers. I have more followers than them, which is crazy because they put out wonderful market data. Give them a follow because I know they would appreciate the support. But in terms of the historical bottoms for December, traditionally 41% of the time we see that on December 1st through 5th. Now, there was someone in the Patreon community, I'm so sorry for spacing on the username, they were saying, well, wasn't Monday the pullback and the potential low? And I wasn't really thinking about that because it was just kind of overnight and then rallied in the morning. But potentially, I would imagine we see one more pullback, and the stats would point to that coming the 16th through the 20th, or after that, the 11th through 15th would be the most logical periods for that, which incidentally would be right the day after FOMC. So look out for that the next couple of weeks leading into the Christmas holiday. But let's delete this image and look at the price action here for the S&P 500 as represented by ES1. And you can see we've had this orderly consolidation and just that bit of a grind higher. So yesterday we were talking about the potential for a rising wedge, which I still can't draw that rising wedge. It's not totally aligning for a clean wedge pattern, but I would just say that this is a orderly flag pattern that is seeing more buying pressure. So all this is telling me is that even though there was selling coming in at a very even price point here, and price action is all just a narrative. It's a conversation between buyers and sellers, the bulls and the bears. And so there was a lot of selling pressure at 68, 66. And the buyers kept stepping in right down here at around that even 6,800, which was previous resistance. So flipping resistance into support is a great sign of strength. And the fact that we didn't pull back in the correction is remarkable, reflecting that strength. And the buyers towards the end of the week were just able to overpower that sell pressure. So a really good sign from that perspective. If we do pull back, I don't think we're going to see anything really below 6,700, which would have us above this local pivot low here from the 25th of November. But the very encouraging sign today, even though it was brief, this previous pivot high right here on the 12th of November, I want you to look at this. We just pierced that above that right shoulder. And this is what I've been looking for. Now, I would love to see some candle closes above that $6,900 level, which is our next overhead resistance. But we were talking about this potential bearish head and shoulders pattern, and that has almost been invalidated by this positive price action. And breaking above that shoulder, to me, is what invalidates these patterns. Now, some people are, I guess, a little stricter, and they say it's not completely invalidated until you break above the head. Hundreds of these patterns that I've been tracking, I've always noticed that when the shoulder is broken, the pattern doesn't play out to the price target. So that wick above, it's a good sign. We could say it's invalidated. I would love to see some daily candle closes next week. So let's just keep tabs on that. But all in all, I think things are looking good, even if we get a correction. And we have that 6,700 level to look out for. And in terms of other support, the point of control now here is at 6,770, this other white horizontal line that we have drawn in. So any pullback to either of these ranges would be completely healthy. If we do pull up mean reversion and RSI really quickly, RSI has just been slowly drifting down on the 4-hour and still, is not necessarily overbought. The mean reversion has been coming back in line too. So it's good to see this reset to neutral while price is drifting slightly higher, although it does give us a bit of a bearish divergence going on here, which is something to look out for, which would be hinting at that potential correction incoming. But I think any correction is just going to be a daily higher low. And I would imagine that it would come on the back of some kind of news catalyst next week. And FOMC is the obvious target, but who knows? There could always be a rogue tweet that surprises us. And last thing on the daily, while we do have a local bearish divergence on the 4-hour, we're not seeing that on the daily chart where the RSI is moving in lockstep with the price action. Now, you could make an argument that there was a bearish divergence in this period right here, and you would be absolutely correct. From the 23rd of September up to that local high on the 29th of October, we were forming that bearish divergence. But I would suggest that with this pullback, we've now seen that play out and resolve, and now the price action and the RSI are back in sync. And the last thing I'll do, I'll just pull up the SPX instead of the futures chart, and we'll go to the weekly, and you can see here on the weekly chart that we had that highest ever weekly candle close. So our previous highest weekly candle close was at 68.44 roughly, and we closed at 68.75. So a great sign there. All right, and moving on to the NASDAQ, and I've got one more blue Kurdic chart here, and this is showing our 10 consecutive up days for equal weighted technology. Now, equal weighted technology and transportation have been running in tandem. I've been looking at some different studies for that, but this is just looking at equal weighted technology forward returns. And you can see how our 2-week change, 3-week change, outside of here, this particular date range, 3-week change, 4-week, 2-month have all generally been fairly positive, but then we have to watch out a little bit around that 3-month mark. So that's what I was talking about there in the intro. And historically, 8 days has been the record since we started tracking this back in 2006, and we got to 10 days up. So we are setting all kinds of records here. But if we look at the chart, you can see that continued grind up here. This has been in a bit of a more steady uptrend than the S&P 500. But the thing I want to look at here is the equal weight tech chart and also QQQJ, which is a bit broader technology index, the, I guess, junior index. And this has 200 companies in the index. And you can see how this today breached just maybe by a few cents, or I guess equal highs. Let's see where we actually landed. Did we get it? Did we get it? It looks like just barely we got into fresh all-time highs. But if we go back to the normal S&P 500, you can see that we are still quite a bit off. We are actually, in terms of percentage wise, still 2%. So mega cap tech is weighting this down, while smaller tech is seeing inflows. And that's often what we see with a year-end Santa rally. Such a silly name. But year-end rallies often see smaller cap names outperform large cap names. So in terms of your positioning and how you're trading this recent pullback for this rally, that could inform your decision making. And if we're pulling up QQQE, the equal weight S&P 500 or QQQ, you can see that this is much closer to all-time highs as well, whereas the traditional QQQ is not there, and the QQQJ, the smaller cap companies, just barely tagged. We're going to give it. It looks like a double top or equal price there on the highs. We're going to say it did it, even if that's not true. It feels close enough to be true. All right, we're bending the rules a little bit. Let's move on. All right, SMH for the semiconductors is continuing to perform, but is slowing down a little bit. We talked about this chart being overheated and needing to cool off a little bit. But the thing I think that's worth looking at is NVD has been lagging. And what we've been talking about smaller cap names catching more of the momentum, this has just been grinding, finding resistance at that 185 level. And then other tech names, I have not looked at these charts today, but I'm just pulling up MU as an example, has been performing better. I'm sure, I mean, these aren't really the small names. Let's find a small name real quick. I should have planned this out ahead of time, shouldn't I? All right, something like STM has just been running the last couple of weeks while NVIDIA has been stalled out. NBIS has been doing okay. VRT has also been running from that low while NVIDIA is still down in this territory. So anyway, just to illustrate the point, and you know what, last thing while we're here, CoreWeave continues to correct. I know this one is risky. I didn't get in a position yet, but it really looks just like, I guess you could say it's both a rounding bottom and you have this inverse head and shoulders, just very clean on the charts. So if this pulls back to test the neckline, I would be tempted actually to get in next week. And I'm just going to set a little alert there. All right, and we'll move that up. Great. So watching CoreWeave next week. All right, and one more just for fun because it's in the news before we get into the actual trades. Netflix, which we haven't looked at for a while, and they just had their bid accepted for Warner Brothers. Who knows if that will get hung up in an antitrust lawsuit or what have you. But this is, I mean, it's not back to the April lows necessarily, but just look at how this has been underperforming the market and the trend has flipped on the weekly. We're back in the confluence model center band. This, I was saying a couple of months ago already, looked like a good short just because of this massive bearish divergence on the weekly. And, you know, after potential acquisition of all that IP, you would think that this would perform much better, and it is not. We did bounce actually just from a bit of support if we're connecting all the dots here on the weekly uptrend, and that's from that October 23 low right there, and then the July 24 low. Interesting that this didn't bottom out on the yen carry trade date. It bottomed out a little bit before, but let's see if that holds. But my guess would be that if we bounce here, we're just going to make another weekly lower high and eventually roll over. I bet it's oversold on the daily. That's why we're getting this bounce. Not even oversold on the daily. We have mean reversion dots, but the market is clearly not impressed. All right, let's talk about the trades from this week in no particular order. And I'm going to start with CleanSpark. Actually, there is a particular order because I'm scrolling through the Patreon alerts in reverse order. So CleanSpark yesterday, I added back to the calls that I had sold back here, and we saw a sell-off today. Now, we had this flag pattern that broke out that I thought was going to target higher prices around 16. Then I thought we'd see a cool off and eventually move our way up to that $20 target. Granted, RSI was overheated and we have these mean reversion dots, so a bit of a cool off was logical. We did see that pullback today, but it's been holding this trend line at the bottom of the flag. So I was a bit preemptive on this one. I'm going to cover, the good, the bad. Thankfully, there's no ugly, but I think it's worth talking about each of these. And I could have been a bit more patient. I played the breakout, but the breakout's also into this 50% level, which we know is strong overhead resistance. So I think I got a little overexcited and should have trusted mean reversion and RSI to tell me this was going to cool off a little bit more. And when I'm playing shorter term trades like this, looking for oversold conditions on the 1 hour chart is usually a wise move. And we did not have that yesterday, but now the 1 hour RSI has almost bottomed. Maybe we get a little bit more of a pullback next week. We've been holding this support at 1360, and we're about to get a mean reversion dot. So it seems like we're getting close. And if you see this next week on the 1 hour, that would be a much safer entry than the early entry I made here. And, I think this trade will still be okay. But when you're playing on these shorter time frames, you want to try to be as precise as possible. Okay, next one also from yesterday was HIVE, where I got into, I need to look up what calls I got into. Give me 1 second. HIVE, we got into the $4 calls for an expiration date of March 20th, 2026 for 50 cents a pop. So we got into those yesterday. We are still in this tightening range. And the question is which way is this symmetrical triangle going to break now because everything's oversold? My bias is to the upside. It's looking a little bit weak today, but let's see what it does. If it breaks to the downside, we still have support at the 200-day moving average at 281, but I imagine we would probably want to get out of those and look for the eventual base to form. The fundamentals on HIVE in terms of their efficiency as a miner are quite solid, but the market has really, kept this one down in the dumpster since those all-time highs in early October. The one thing I will say on HIVE that gave me a bit more confidence with the entry yesterday was that if we're just drawing downtrending resistance from the all-time highs and we're connecting this last little peak, we had those 3 touch points, 1, 2, 3 here on the downtrending resistance, and we broke out. Now the breakout's been a little bit weak. Normally when I see a breakout, I like to see a pop right away. So this hasn't done the same as RGTI and QBTS, but let's give it a little bit of time. All right, HIMS. I actually got out of my position today. So if you recall, we got into a long position around here, and I've just got my trade tracker up. Hold on. We got into the $37 calls for January 16th, 2026 expiry. And from oversold conditions, we were playing this for a bounce, potentially up to 46. And we rejected once, and I was about to reload, but there was just some weakness on the 1 hour chart. Luckily got that bounce yesterday. And as we were getting into the resistance line, here I actually was respecting the mean reversion dots on the short time frames. And since RSI couldn't get to 70 and we have those mean reversion dots, that's always hinting at a bit of weakness. And when we're seeing that at a previous support zone where we had all these previous lows in June of this year and then again in August of this year, that is a natural zone to anticipate some resistance. So it makes sense that we're selling off here. Anyway, got out of the calls. 20% profit. I was hoping for more, but now I'm just looking at this to reload and assuming we can bounce anywhere above this swing low from Wednesday of this week, which was at 35.78. Any bounce above there would still have me confident in this uptrend, and we've got lots of room to run on the daily, and I would look to get back into that position. So just playing this on the very short time frames, I know that is a bit much for most people who don't have time to look at the charts every day. You might just say on the daily, oh, I got in down here. The daily has plenty of room to recover. I'm just going to sit through this chop. And actually on the daily, the other thing that we had as resistance was the Confluence Model Center Cloud. And this is just our first swing, so it would make sense that we would at least take one more swing here in the center cloud. And that's perfectly fine in terms of a strategy. If I was in spot, I would probably do that. But since options are more volatile, particularly ones that are expiring in just a few weeks in January, I wanted to get out of this. If I had more time on the options, probably would have made a different decision. But it ended up being the right call because we did reject pretty aggressively from that level. Okay, another trade from this week is OKLO, where I sold my short position, and we talked about this, I want to say on Wednesday. We got into the short position here, and I messed with my highlight line. Let's make that 2. And I got out of the short position here. So after we had broken into the center cloud, came back to test it for support, exited the shorts, ended up breaking out. Now, yesterday, just before the close, I entered the short position again, just with 20% of what I wanted to deploy. And everything's a whirlwind. Maybe I talked about this yesterday, but I was anticipating our real tough resistance would be closer to about 118 to 126. It does make sense that we did see some resistance here just because of this local low on the 22nd of October. Anyway, after hours, they announced a $1.5 billion bond offering, or secondary, whatever they call it, that is going to dilute their shares, sold off, and then stabilized. And I almost got out of this on the pullback because on this drop this morning, the short position was up almost 20%, but it just started consolidating and it closed right below the 50% level. So I figured I just want to give this a bit more time to see this trend line here. This has been holding us up for the entire bull market, and it played support just a little bit. So if we go way back and I don't move lines, you can see all the support this trend line played for us. Played a bit of support here on the way down, and then resistance broke through. I imagine this is probably going to play support again as we come into it, and maybe we'll get a bounce away from there because the energy narrative is very hot right now. Jensen from NVIDIA has been all over the podcast circuit talking about the importance of SMRs and different sources of energy. So that's a bit of a tailwind for this. And if we're just looking at price structure, despite the market not liking that bond offering, we did make a higher high compared to this very important pivot high here on the 19th of November. So I wouldn't be at all surprised to see this trend line be our higher low and a continued recovery. So I'll be looking to be nimble and get out of those shorts. Now, if we do break down from this, that's a different story. Then I'm thinking, okay, we're in a macro downtrend and we might hit the target from this head and shoulders pattern that we've been looking at that $36. But just one day at a time, and I am going to act nimbly with this next week. And the chart is jumping all over when I hit the Command Z key. All right, let's move on. All right, Deckers, this has been recovering nicely, and I tried to set a limit order for my calls to get out of them on this momentum push this afternoon. We are getting into resistance at that psychological $100 level, and the gap close would be at 102.68. We're starting to get close to overheated. We still have some room to run here on the daily, so perhaps we go up to test the 200-day moving average next week. But I would be looking to get out of these, wait for a pullback, and then re-enter. So yeah, I'm going to try again to sell those. And I'm thinking of selling just because we're closing this gap. We're into resistance. It looks like we can go a little bit more in terms of mean reversion and RSI. And if we look at the 4-hour does a better job of sharpening up this trend line, which we did break through on the 4-hour. The 1 hour, because you don't see the extended trading hours, it doesn't lock it up appropriately to the price action. So we made it through that, and really this 200-day moving average at that 107 level, I guess probably 106 by the time we try to get there next week, and we have this previous swing high, would most likely be where we reject, and the 4-hour time frame is already really overheated. And I have this diagonal trend line drawn here on the 4-hour. A breakdown of this, even if price is heading higher, would be a sign of more of a correction. So if you're in this trade, and I know a lot of people in the community already exited around here at around like 21 to 25% profit, depending on where they got in between our couple entries. I would encourage you to get out of this soon. And my calls are for March, and I want more time in those for when I re-enter. So, I'll be looking for this move and then a correction to set that higher low, and then hopefully get us on the path to correcting back to all-time highs, which are way up at $225. That might take some time because of tariff impacts on, their overall revenue. But I think with the growth that they are seeing and the new partnerships they have, that they can definitely get there. Okay, the quantum names, I'm doing them backwards today. We'll start with QBTS and then move to RGTI. Quantum saw a bit of a cool off today, which is absolutely understandable. After off the pivot low on Monday, we did almost 40% on this name. We'll measure that out for RGTI, but it's still in this uptrend. The 4-hour is very overheated on the daily. We have a ton of room to go on the daily. On the daily time frame, we are, what would you equate that to? Somewhere in this ballpark here in terms of the overall uptrend. So I think this can go quite a bit more, but we have to respect what the 4-hour is doing. And I'm just waiting for the price targets to hit. So this one is right at about $30, which I guess we got close to that. And then with how steeply the confluence small bands are coming in, I would expect a bit of a sell-off. I know a lot of folks in the community already took profits yesterday. This was up at like 88%. Today it's like at 68% with the pullback. So it makes a big difference when you get out with these shorter expiry options. And these are for, QBTS, April 17th of 2026. So we've still got some time on this one. We honestly could have bought it with shorter time to expiry. Anyway, so when it gets to $30, I'll probably sell them, wait for a pullback, reload. You could always roll options, but when you're into resistance and RSI and mean reversion are overheated, it doesn't make sense to me to roll the option to lock in profits, because then your new position, even though it's cheaper, is going to lose money on the way down. I would rather get out because I'm confident that it's going to pull back a little bit and try to find a better entry. Now, if we look to RGTI, very similar. We pulled back right from that 31 resistance. I was thinking we'd get to 33. I honestly probably should have taken some profits on this yesterday, but it is what it is. Also still up about 60% on this one. And from the pivot low, this one moved up about 32%. So not quite as strong, but still performing well. And on the daily, you can see we broke out, that RSI downtrend is for the 4-hour. I need to change these. When you double click on these, just change it so it's just on the time frame you want that trend line for. And then when we go back to the daily, now on the daily, if you want downtrending resistance on the RSI, you could, draw that in right here for your RSI break to give you a sign of when things might be turning. And that did a pretty damn good job of nailing the bottom there. So little tip. And we'll keep that one for the daily. But same general strategy applies for this. Get out, get back in, look for that cool off, base it off the 4-hour. And I wouldn't expect the 4-hour to reset all the way. And just for a bit of a case study, if we look at the last big move up, when the 4-hour gets overheated and you get these mean reversion dots, it can keep running for quite some time. And actually, that's something I should be careful of because you don't want to get out too soon. We have a mean reversion dot, we have RSI, but it pulled back. Look what we did right here. We have a mean reversion dot, RSI just barely over the line, pulled back. And look where that was. That was right here. And then it went on an absolute rampage, cooled off a little bit more, another rampage. So don't want to get out too soon, but the thing that's giving me pause on this was an era coming out of a long coiling pattern where we had that consolidation period for months, from July of 25 all the way through September. And that coiling spring just allows you to build up for a bigger move. Now we've only had a coil for about a quarter of that time, maybe a third of that time. So I don't think the move is going to be as explosive. And after a big pullback like this, just like we've been talking about, the most likely scenario is going to be a higher low. So maybe we can get up to 44 at the 786, but I would imagine some kind of tightening range or consolidation is going to be the path forward for both of these names. Now, LAES, another trade we got into at the 200-day moving average, is in a very similar scenario to the quantum names where the 4-hour is a bit overheated. I'm just in spot for this one. So I am happy to sit through any downtrend and probably add a little bit more if we pull back down to about that $4 mark to test the confluence model center cloud. The inverse head and shoulders pattern that we have here was targeting about 560. You know what? Let's just draw it out again. I don't know why it got removed from this chart, but if we're looking at that here, that puts us, where is that? Oh, 615 actually. So yeah, I am just waiting for this eventual price target to play out. And I'm happy to stick with a bit of a pullback next week if that is the case. And if we look at this on the daily, it has plenty of room to recover on the daily time frame. All right, USAR, this is another one where I took some profits today. So we got in right here at the 200-day moving average and back in down here. And this is one I want to hold a little bit longer. They have a great business story and acquisition that happened this week that led to this almost, what was it? Oh, almost 40% pump this week. Now, I'm just in spot on this, but I did decide to take 20% profits because the confluence small clouds are coming in quite steep. We're getting resistance there, overheated on RSI and mean reversion. So I sold 25% of my position. I honestly think this could come back to the 200-day moving average at these previous lows around $14. We're currently at $17.40. And I would reload and add to the position then. This is one of the same ones where on the daily time frame, it's got a lot of room to move, but we might see that pullback. And honestly, what it could do on the daily, and I'm just speculating a little bit, but since we have this strength in the name now, you can see we have a neckline. If this pulls back, that's going to give us a beautiful inverse head and shoulders, which again, we're speculating. We have to react to what the price action actually does, but this is a very likely scenario for the technical setup of this, and that would have us at $25, which is a target I would be quite happy with and actually aligns with, well, the gap close is at 23 here on this gap down. So 23 to 25 seems like a very likely target, and watch it after a bit of a cool off to present another entry. All right, ALAB, which is, I think, the last of the trades. Oh no, we have IBIT and MicroStrategy. So good weekly close. You can see that this previous downtrending resistance that we broke out from, and actually where we got into the first 20% of our trade on the breakout of this trend line on Monday, then Tuesday, the Oracle AMD news, big pullback, closing above that, fantastic sign, and really strong candle today. And we, even on that bearish news and this bearish candle, didn't make lower lows. So we've been holding this recovery uptrend, and this is setting up well for more of a move next week. If we do look at the 4-hour just to see, yeah, we're fairly reset as well. And often when an asset gets into an uptrend, the 4-hour can bounce. Let's actually go to its last uptrend and not come back down to the bottom of the range for quite some time. So that might be what we're seeing right here. And for daily higher lows, I often say, look at the 1 hour. And what did we do on the 1 hour? Right there on that pullback, well, the 1 hour touched 30 on the RSI. We got a mean reversion dot. So it's a classic case of the 1 hour oversold condition setting the daily higher low right there. So daily higher low compared to what we saw on Friday, the 21st of November and the 25th of November. So yeah, all in all, this one looks good, and we're just holding our calls. And for ALAB, what do we have again? Sorry, I have a hard time reading spreadsheets. Okay, the $185 calls expiring 2/20 of 26. So expecting now with the breakout, a bit more explosive of a move here. All right, and last two trades I got into today was IBIT and MicroStrategy. And MicroStrategy and IBIT are risky right now, I would say, just because we are not sure if we are 6 or 7 weeks into the bear market or if the bull market is extending. And it's trying to prove a recovery right now, but it has been slow, just steadily higher high, higher low, higher high. I'm assuming higher low. And this did bounce today from that $89,000 level where I wanted to see support step in, which, if you recall, corresponds to these lows in January and these highs during our tariff correction. So where it bounced was a good sign. And let's just delete the confluence small clouds. No one needs those right now. And it also made a lot of sense because it was the third time that we were hitting this trend line. And we know that third times testing trend lines have a very high chance of rejecting. And now if this is our higher low, I'm expecting that fourth time breakout and a fairly swift move to the next trend line and that 98K level, which is going to be our next major zone overhead for Bitcoin and IBIT. Now, volume has been dropping off a little bit this week, at least here on Coinbase, which is not the best sign in the world. There are some folks saying that this pump here was really just due to shorts getting squeezed out. So that is something to definitely monitor on chain. But it was the same scenario of the the 1 hour oversold conditions marking that daily higher low. So we dropped below 30 on the 1 hour RSI, mean reversion dot, right into that support line at the 89K. So it gave me a lot of confidence to enter and add to my IBIT calls. And then that transitioned over to entering MicroStrategy at the relative price for that asset. So let's move over there. All right, and MicroStrategy, I'm actually here on the 4 hour chart, and we're still in the uptrend, and we found resistance at that overhead trend line. Also our third touch point, although spread out over a much longer time. So initially faced that on October 6th, then touched it again on October 27th. And this was our third time retest. And then let's see if we can get our fourth time breakout. And what's looking good to me on the 4 hour, we broke back into the Confluence model center band and are giving that back test for support and trying to move away. That's at that $177 level right now. So I'm looking for that to hold. And then really the $200 level is the big hurdle for MicroStrategy. And I think it could accelerate a bit from there, like I said yesterday. But because I was getting into IBIT, got into MicroStrategy at the same time. Again, these are very risky. So position them accordingly in terms of the appropriate size in your portfolio. And I have to admit, I'm probably just a little bit emotionally attached because I have made good gains for MicroStrategy and I've been in MicroStrategy and Bitcoin for so long. But if we're looking at them objectively, they're not the strongest assets in the market right now. A lot of the metrics on the daily and the weekly are pointing to, historically very oversold conditions, mean reversion at extremes, like we've been saying that we haven't seen since COVID. So there definitely are reasons to go into the trade, but from a sentiment perspective, they have a lot of catching up to do, and you can do probably a lot better right now just trading equities, and there's a lot of momentum in the right equities and the right sectors. So something to think about there. Just because I'm getting into this doesn't mean you have to get into this, and it is a riskier trade. So again, position accordingly. All right, I'm done giving my soapbox lecture, and that is it for the charts today. You know what? Okay, it's not it for the charts. I would be remiss if I didn't cover Solana as well. So Solana, I'm just looking at on the shorter time frames here. Let's go a little higher time frame. Very similar setup to Bitcoin, where we have an overhead trend line that we got into for that 1 to 3rd touch point, rejecting right now. And we did, or hopefully are, making a higher low in the recovery. So if we're looking at our lows here from the 21st of November, and then we made those equal highs, higher low, I guess you could make an argument for a double bottom. It's pretty close. And I'm hoping that this is our next higher low right here. So we did have a bit of a head and shoulders pattern yesterday, and that is pointing to 128.64. I've still got a limit long order at 128.80 something. And then I just jumped in a little bit here because on the 1 hour, the Confluence Model Center Cloud has been providing support for us, and we are definitely oversold. We have a mean reversion dot, but it doesn't look like the most convincing. I would really want to see it bounce away more meaningfully. And I'm wondering if we are still going to take a trip lower to hit that target over the weekend. And then we're also would be in the lower band. So hopefully we can get some recovery on from here. And we also generally bounce from the 4 hour center cloud. So, I guess let's just see how this does on the weekly close. And if we can get some more momentum on Sunday afternoon. If we do look at the 4 hour, we bounce from a good range, where when you are in uptrends from Solana, it generally bounces from this zone on the 4 hour. So this is a bit speculative, but I'm wondering if this is our first bounce point in this uptrend and recovery. Of course, we need to see it move away, and breaking this trend line and really breaking out from this 144 zone definitively would be that first good sign. So yeah, watch all these crypto assets this weekend, and that will tell us a lot moving into the open or the overnight open on Sunday night. All right, so that is it for the charts. While things are generally looking good and grinding higher, and I would say just the very orderly sideways consolidation that we have seen is looking rather bullish to me, I'm still scouting a bit of a pullback and a correction to set the monthly low before, say, the 16th of the month. And we do have a volatile or a potentially volatile week coming up this week with FOMC, the interest rate decision on Wednesday. Wednesday also has earnings for Oracle, which has been quite beaten up, and we didn't have time to talk about the debt there, but it's definitely one to be wary of, although there have been a lot of institutional and dark pool transactions on that one this week. So I think someone knows something and they're loading up ahead of earnings. But AVGO is reporting on Thursday, and those are really the last big tech earnings to watch out for this particular earnings season. So we'll get back into it Monday after the close to plan for the week ahead. I hope you all have a wonderful weekend, and thank you again to everybody in Patreon for making this possible and for supporting me on this journey. It really means the world to me. I have had few things in my working life that have been this fulfilling, and previously I was in a creative career, which I thought was very fulfilling, but I've enjoyed this even more. So I really appreciate you guys. I hope you have a wonderful weekend. Bye for now.